here with Damien Gough today from GPS. So you're head of the Asia Pacific region. And I thought we were going to have a little bit of a chat about expanding into this region where we are to help our community back in UK and Europe to learn about. Today, we're going to talk a little bit about Malaysia. So when you are expanding into Malaysia, is it anything specifically that GPS saw that you wanted to capture and the opportunity in this market?
Hi, Camilla. Thanks for hosting me. Look, to answer that question, I think just generally what we look for is a market in which we see all of the foundational factors that will drive success of a fintech or a digital bank. As you know, we're an initial processor. We process for a variety of fintech use cases, pretty much all of them, and we support a number of digital banks. And obviously there's a few things that we look for that will be effectively required for a fintech and or a digital bank to flourish in that market alongside of us. And so if we ascertain what those things are, we look at the market assessments, Malaysia is right up there from an Asia Pacific perspective because it's got ease of doing business. So if you look at their World Bank, they've ranked it 12 as easiest market in the world. And so for comparison, the UK is 8. If you look at, say, Singapore, it's 2. So it's generally speaking, though, in the world rankings, that's pretty high. So getting into the business, establish yourselves, all the various aspects to running a business are actually quite easy in that market in comparison to some of the others. So that's a big tick for us. We look at the population. And so for us, we look, is there going to be scale within the market? And yes, in Malaysia, you've got a population of 33.5 million people. So that's pretty impressive. And a median age of just over 29 and a growing middle class. So equally very, very impressive. And from an operating cost perspective, like we look at, can we maintain a good margin in a market? More importantly, can our clients maintain a good margin in that market? From an operating cost perspective, it's actually quite a low operating cost market. And so for a fintech coming in from Europe or from other parts of the world, the operating costs are actually quite reasonable. And so that's a big one. From a location perspective, what we look for is the ability for strategic benefits to be gained from that location. And so in Malaysia, you're pretty much the heart of Southeast Asia, which is obviously a big benefit, and you're within a couple of hours from a lot of the region. From a language perspective, it's easy to do business. And there's a lot of people in the market that speak English, not necessarily the primary language, which is Malay, but a lot of people speak English in that market. So there's an ease of doing business there. From our perspective, we really see mobile being a really key component to success for most fintechs. And so in that market right now, mobile banking penetration has really started to take off. The government, B&M, implemented the movement control order on the 18th of March 2020. That's actually seen mobile banking rise by 125%. So it's hitting a penetration level of about 62% now. And internet banking is well over 100%. And so that's taking off, which is great. So the adoption is there, the digital economy is there. And generally the regulator is very supportive for the fintech ecosystem, which is the other thing we look for. Is there an open banking framework? Is there an opportunity for fintechs to flourish in that market based on the way that the government has structured and embraced and supported the introduction of both fintechs and the digital banks to come in and potentially compete against incumbent banks? And that is there. Back in 2016 it was, Bank Negara Malaysia issued a Reg 2 sandbox environment for FIs, and fintech players are in there now experimenting with solutions in a production environment or a live environment, which is great. For me, the thing that I'm really excited by, and part of the reason why we're certainly excited in particular, is the fact that, as I said, they have now brought about these changes towards open banking and basically brought in a licensing framework for digital banks. So the digital banking framework was introduced towards the end of 2020. What that means is there is definitely an appetite within the government to democratize access to finance for the unserved and unserved. And so what we're expecting, what the market is expecting, is that up to 5 digital banks will be issued with licenses by the first quarter of 2022. At the moment, we've got a couple of those bank applicants that we're supporting, and so we certainly hope to be supporting 1 or 2 digital banks in the Malaysian market over time. And the market is getting more and more receptive to some of the things that are happening just generally around the globe. So as we all know, it's been a big 12 months for digital assets and tokens. So in late 2020, I should say, there were changes, and increasingly there's changes towards supporting cryptocurrencies. So there's the establishment of platforms to facilitate these trading of such under what's called the Guidelines of Digital Assets, which came into force, I think it was 28th of October 2020. So with all these things happening, it's showing to be a market that's easy to come into, embracing the change that's happening and embracing fintechs and digital issuers. And certainly a lot that's gone on in that market that's helping fintechs to flourish in that market. So that's kind of, for us, why it's an exciting market and why we're working with a number of clients to either enter the market or support them as a homegrown fintech to start operating from within the market.
Thank you very much. That was a very detailed answer. I learned quite a bit there myself. So thank you for that insight. If you would pinpoint down to like a 3 bullet point strategy, how you're going to Malaysia, how would that look like?
Sorry, how we go into Malaysia or how a fintech goes into Malaysia?
No, your strategy for Malaysia. So it was very good and detailed, that answer. If you would have a 3 bullet point on how to go to Malaysia for GPS.
Look, I think like the key thing for Malaysia, and actually for a lot of markets in Asia Pacific, is that people are looking for the support structures that they need to navigate the complexity of a completely different environment. And so from our perspective, the strategy is, as it's a global one, but it's certainly one that we apply to Malaysia and to Asia, is global. Like we need to be a company that can give people global access, global reach, but more importantly, give them local access, local knowledge, local connections. Like the only way that we can make the complexity of a new market entry more simple is if we have the local teams in place that actually know the local languages, they know the local regulation, and they know the local players. Because increasingly, as we all know and acknowledge in the fintech community, collaboration is key, especially from more emerging markets where regulation and other things might be barriers to entry or slow you down. If you can rely on partners to help you navigate those complexities, that's something that we think is only going to be truly supported if you have the local teams in place. And so to be open and very candid, we don't have teams in Malaysia today, but we do have a large regional hub in Singapore. We have other teams across the region. So in Asia, we have 90 people now spread across the region. As we get post-COVID, the intent is to start supporting some of our big clients in the market with a local team, specifically within Malaysia. At the moment, it's obviously a little bit more challenging, and so we're waiting for the post-COVID environment and waiting to get a bit more momentum in terms of clients within the market. But certainly, we are committed to Asia on the basis that wherever we get large strategic clients that want to work with us, we see the only way they can truly help them scale is to actually give them that local support, not just in the region, but actually in the market. And so from a Malaysia perspective, that's one thing we're doing. The other thing which we're doing, which needs to be navigated, though, is we know increasingly that a lot of regulators have an issue with where the data resides and also not just the teams where the data is. And so what we're trying to do is look at how do we replicate our data and our stacks and support our clients as much as possible in region and or in market. And so what we're working towards now is rolling out across Asia Pacific in AWS as a partnership. And that means that if and when we need to, we can actually deploy our technology stack within that market at a lower cost. That means obviously part of our strategy right now, we're evaluating what it would take to stand up in Malaysia, what's the regulation look like, what's the support from BNN look like for supporting cloud hosting and that type of thing. But certainly that's part of our strategy right now that applies to Malaysia and other markets is if it makes sense for a digital bank or a tier 1 bank, as we get more involved in transformations of banks, what would we do and how would we do it to make sure that it's cost effective and we can enable localization to that level? And so that's a big part of the strategy. The other thing is, in any market we go to, Malaysia is no exception. We make sure that the product is customized where needed to support the local networks, to support local product nuances. And so we are making sure that we know who are the leading eKYC vendors in that market. We are making sure we know who are the leading card bureaus in that market. And what we try to achieve in any market like Malaysia is make sure that we've pre-integrated to the broader ecosystem those components. And then the key one to that is BIN sponsors. So if you're a foreign fintech coming into the market looking to get up and running, the challenge is getting access to the right licensing to be able to operate. Sometimes the fastest and easiest way to do that is, as I said, partner earlier on. And so we are looking at establishing partnerships with local BIN sponsors so that we can bring in a European or a US or an Australian company, for example, and say, hey, the ecosystem is pre-connected in Malaysia. We have eKYC vendors, we have card bureaus, and we have a BIN sponsor ready to go, and you can actually get live in the market within 3 or 4 months versus do it yourself. And I've seen this happen. You might still be working on this 18 months later. And so we're trying to not only remove those friction points, but dramatically speed up the time it's going to take to stand something up in the market.
It's really interesting to listen when you talk, because there's two sides to it. It's you being a fintech going in there and seeking, do you need partnership and do you need the local contacts, as well as being the enabler for other people to follow you. So I think that is very good knowledge and insight, because you've done it yourself. So you know, where do we need a partnership and where can we operate out of Singapore, which I think is very common for European or American fintechs or overseas fintech coming to the APAC region. So in the journey and setting up and establishing yourself in Malaysia, what would you say has been the biggest hurdles?
I think the biggest hurdle, once again, the way that we view doing business is very much in a collaboration and then in a partnership with our clients, with our customers. And so for us, the biggest challenge for that market is we as a business need to understand the unit economics, the issuing economics overall for our clients that will be looking to go into a market. In Malaysia, I suppose one of the challenges is the issuing economics are not as rich as some other markets. So in accordance with Central Bank Negara Malaysia, the payment card reform framework was introduced in 2019, and that covers both prepaid cards and debit cards. And what that reform basically did was reduce and cap the intercountry interchange rate quite low, down to 21 basis points, or 70 cents Malaysian ringgit and 1 basis point, whichever is lower. Now, if you look at some of the other markets in Asia, the interchange rate table means that your effective rate that you could earn in interchange is 3-4 times that, a much higher amount. In case the regulator has brought that down. And so that does mean if you go into the market, and if we're supporting a fintech, we've got to be very conscious that for them and for us, the unit economics are not quite the same. And so our challenge for us is we probably can't make the margin we normally would, and obviously we have to be factoring as a balanced partner that we need to then be mindful of unit economics, which we do, which then obviously undermines the appetite for us to go into a market. We're taking that on. But separately, then we have to work with our clients to make sure that they can grow a sustainable business, and so that does mean they have to look at other products, like for example, lending is obviously a key one that builds a sustainable business model. That's a different licensing regime. And so once again, one of the complexities for us was navigating how to get into the market to help our clients grow a sustainable business. And so that's been a challenge. The other one is, which ties back to your last question and my comment, was if you go in and you're a third party coming into the market as a fintech and you're not homegrown, and even if you are homegrown, the challenge can be licensing. So gaining local licenses has been somewhat slow and challenging for a number of fintechs in Malaysia. And so we've had partners that have been working with, and it's been taking a lot longer than anticipated. Now, part of that more recently, obviously, is with COVID. It's impacting a number of regulators across the region. This is not just a PDM thing. Their priorities are obviously elsewhere. However, the challenge has been we don't see that changing anytime soon. And so there is always a risk that if you come in and try to apply for the licenses, it could be several months before you make any progress. longer again. And that then obviously puts the pressure on us to make sure that we do have those local bid and sponsor partners that are ready to go, so that if our client comes in and understands that complexity and the challenge that faces, they can partner up with someone in the market. So they would partner with a local bid and sponsor and our platform to be able to get to the market without knowing that there's that big challenge to get around. And so I think they're the two big ones that I would call out. Other than that, like it's been a pretty easy market for us to go into and start supporting. I suppose the only third one, which also goes back to my last one, was AWS. So there is a PI data handling requirement. The B&M government will give a waiver around the way data is handled internationally, providing there's the right protections in place and governance, and they get comfort with the way that data is being handled. But for a lot of fintechs that are coming from international markets, they want to operate with systems outside of Malaysia, and that then means some of the data is residing outside of Malaysia. There is process, there are steps, there's challenges to getting that approved. And so that's something that we've found a little bit difficult, and one that we may address over time, as I said, with, say, a local instance in AWS. For now, it's something we're working through with our partners to make sure that we get over that, and we've done that multiple times now, but it's certainly a challenge or barrier to entry that we've had to face, and so the international players coming in.
Yep. Yeah, it comes up in many conversations, the risk of regulation, or we should say the hurdle to understand it, and what risk appetite do you have in case it's changing. It's been super interesting to speak to you today, and we're looking forward to see your success and growth in Malaysia. No, thanks very much for hosting us today, and I certainly look forward to hopefully working with EPA members that are serious about the market. We're happy to help, happy to support people that are interested in going to the market. It's certainly, as I said, a market we're interested in going into ourselves.